Well, hello, folks. Let's get this show on the road. I'm James. Welcome to the stream. We'll start in 4 minutes' time. Just setting up early so that everyone can get in. Welcome to everyone. I'm not sure who's here, but welcome to everyone if you are here. It's Sunday night. It's time for Sunday Night Live. So sit back, relax. We're going to talk about a lot of important stuff today, including natural gas stocks, what's going to happen in the next few months with rate cuts and so on, and what the effect of the jobs numbers were or was last week, and how we should view that in terms of what the Fed's likely to do and what this year holds. So welcome to everyone. It's great to see you all here. And I'm just going to make sure all the sound is set up and everything's working. So we've got a few minutes, about 3 minutes before we begin. I'm going to switch across to my notes now, and we'll start off with the notes. Sorry about the itchy nose. So welcome to Sunday night, and the first, second live stream on a Sunday this year. I had one last week, but I was over at a hotel in Johannesburg, so it was a little bit kind of weird because it's difficult for me to focus and pay attention to what was going on properly. So let's say hello to everyone while we're waiting. Good day, Emily Trading. Always lovely to see you, of course, being part of our team. That's me. Hello, Paul. Powell from Poland. Powell, Paul, same thing, I suppose. Fitzcarraldo. And NASA, you want to look at platinum? Well, I'll have a look at platinum, NASA, in a briefly, but hello, Omkar. I don't trade platinum an awful lot. I'm more focused on gold and silver. Hello, Emil. Nice to see you too. And Roby. And Ole from Germany. And Vishesh, the gas giant. I'm sure you've got some questions, Vishesh, about natural gas. So I think I'm going to focus a little bit on natural gas today. So pay attention. I think I'll start with natural gas. So we'll get that out of the way. There's quite a lot to be said in terms of the COT positioning, where the charts are at that big sell-off, and what's likely to happen with weather and so on going forward. So we'll talk about natural gas in detail. Vishesh, so don't worry, we'll get that. We'll get there. Nat gas, waiting for nat gas. I think a lot of people are waiting for nat gas after the sell-off. And I've got a few things to say about natural gas, by the way, in terms of the way people have been trading it. I'm not happy, and you know who you are. So we'll talk about that as well, about how people have been trading natural gas in a downtrend, in a very strong downtrend, and trying to buy the dips, trying to catch a falling knife. And hard work. Yeah, it was hard work, hard week. That's right, Emil. So we're going to talk all about it. I'm going to start with natural gas. So make sure, and that's why I started a little bit early as well. So make sure that you pay attention, because I'm not going to come back to it through the session. I'm going to deal with natural gas and then move on to other things that we must talk about, like metals, stocks, crypto, and some of the softs and grains. So good day, the Florian. Hard week, yeah, as you said. That's quite correct. So tough week. Some did okay, and some survived pretty well, including me. Some of the folks over at the private group did pretty well, managing to survive through the carnage. Others didn't do so well. So yeah, tough week for some people, but it's not all over. If you fall off the horse, don't get back on too early. Don't revenge trade your horse. Don't sell your horse, but get back on it at some point. Vishesh, I recommend people to attend lectures by James whenever you get the time. Thank you, Vishesh. I appreciate that, mate. Evening. I'm doing great. Thank you. Ritesh, nice to see you too. All right, folks, I think we have 1 minute before we start, and I'm going to leap straight into my notes as soon as we do. And then as soon as we've gone through the notes, I'm going to go straight into natural gas, because that's the sort of biggest portion of what I want to talk about today. But I will cover all the other markets, so don't worry about that. I will get there as time allows. Hello, the Tito. All right, folks. So settle down, turn up the volume, grab a coffee, and get ready for the show. We're starting right now. So let me switch across to the notes. Just give me 1 second. I'll put the notes to the right-hand side for you so that my face doesn't block it out. I'm just waiting for the clock to tick over before we start. It's actually, there we go, it's just ticked over. Right, let's get straight in. And I'm not going to read through the comments any further. I'm going to go straight into the notes. So here we go. All right, so this is the market update for the 11th of January. That's today, 2026, Sunday night live, every Sunday night this time. So make sure you're subscribed. Make sure you press the notification bell to get all of our videos. We have a video every single day of the week, including a members live stream on Wednesdays, and then this stream and crypto streams during the week as well, and then the stream on Sunday. So make sure you're subscribed, press the notification bell, and join the channel if you want to get hold of the members' midweek videos too. Let's get straight into it. General markets. These are just general comments. I'm not going to read through every single point, but I'll try and sort of précis it as quickly as possible. So we had the non-farm payrolls jobs number last week, which was well down, about 49,000, I think, just under 50,000, expected slightly higher, and generally just a very bad number. But unemployment ticked down by 0.1%, in conflict with a very poor jobs number. It's important to keep a track of jobs numbers because I think the Fed is going to be looking more and more at jobs rather than inflation. And the jobs numbers, particularly if they drop off startlingly, dramatically, will probably encourage them to cut more readily than before. I'm going to talk about the rate cut scenario for this month shortly. We'll get to that now. So rate cut pressure, if we look at the numbers at the Fed Watch tool at the CME, and if we look at Polymarkets, there's almost no chance of a rate cut this month. Towards the end, I think it's the 26th, towards the end of the month. Almost no chance. We'll have a look at those charts actually on this page. I've got them at the top here right now. So, but if the jobs do drop off dramatically, and we've seen quite a startling drop, although the unemployment number ticked down, the actual jobs numbers are pretty bad. There could be a case for an emergency rate cut after the next non-farm payrolls, the ADP and the JOLTS jobs numbers when they come out towards the end of the month. And the non-farm payrolls report comes out on the first Friday of February, whatever date that is. There's news that the Donald Trump and those around him want to increase the Pentagon budget from roughly $1 trillion to $1.5 trillion in 2027. Startling news, I suppose, a 50% increase. And therefore, we should start to think about, and if this gets confirmed by Congress, we have to start thinking about rotating into some of the defense stocks. These would be names like Palantir, Lockheed Martin, Boeing, some of the chip names, maybe AI stuff, Palantir, I mentioned, uranium, maybe even, use a lot of uranium in war, and other names, General Electric, perhaps even. So we'll start to look at those through the year as just a heads up, early warning. We reached a new all-time high on the S&P, but not on the NASDAQ. But the NASDAQ is in an ascending triangle. It's not broken out yet. It's trying to. I think it will. We have about a 65% chance the NASDAQ breaking higher. Metals seem bid again. We'll look at that. We're short on gold, long on silver, short on copper, actually hedged on copper. I'm going to have a look at those as well because they seem to be getting a bid underneath them. And if we need to reposition, particularly gold and copper, we should do so soon, like tonight or tomorrow. And then natural gas, we're going to talk about that now for the rest of these notes, and then I'm going to go straight into the charts. Natural gas, and I'm hoping that everyone can hear me okay. If you can, please put just let me know that you can hear me okay, because I'm busy nattering away without even looking at the comments. So I'm glancing at them now. Tell me if you can hear me well, and if the sound is good or if it's breaking up or anything weird. I'm keeping an eye on the chat as we speak. Let's get into natural gas. Natural gas, the weather, the COT report, and storage are all bearish. Thank you very much, MT and others. So I'm going to repeat. Natural gas, the weather is bearish. The COT report is bearish. Storage is bearish. It's all bearish. Doesn't mean there's no chance or an opportunity for an upside surprise. When everything's bearish, when everyone is bearish, including big players on, we'll have a look at that now in the COT report. It could be that there's a chance, a possibility. Don't get your hopes on it. Don't hang your account balance on it. But there's a chance we could get a sharp short squeeze despite everything being bearish. All right, that's the general overview of everything. I want to go into natural gas, read through these notes, and then go straight into the nat gas charts. And then when we finish there, I'll carry on with the other instruments that we're trading. Yeah, European storage is bullish. That's an important point. Natural gas, Europe will require more LNG into sort of the next few months that lie ahead. I think there is some doubt as to whether that'll affect US natural gas pricing significantly. I'm not sure. It might be priced in already. It may not affect, in terms of volume, the natural gas price all that much, but certainly exports from Henry Hub and the export terminals going out is certainly worth considering in terms of potential price. Let's just read through this now. Natural gas, the price has dumped from the blow-off high over $5 and is now below the 78.6% fib, very important, the last chance fib, and trading in the 310 to 320 decision pocket. If you remember on X, and for those in the private group, I said I would put a stink bid in as I was traveling on Friday. I'd put a stink bid in to try and buy around about 318 in that region. We're in that region now, I think at 314 or 5 at the moment. I've not yet bought natural gas. Everything's bearish. There's no evidence of a reversal, and I'm hedged and not willing to unhedge at the moment. But let's carry on. So we're below the fib. We're down into that 310 to 320 decision pocket and near the circled area on my chart, which I'll show you shortly. This matters because the 786 to the full 100% retracement, preferably the 786, is the zone where the trend sets, the last chance for it to bounce out and move up. We're now below that level. Let's consider the Fibonacci levels visible in the chart. All right, we've done it. At 314, we're below, I'm going to have a look at these numbers shortly, but we've got 324 above us that needs to be reclaimed. That's the 618 fib. We're also below the 786, sorry, that's the 786 fib, 324. The full retracement is down to 262. That's the last full 100% retracement. At 314, we're below that 786 fib. So not good. We're approaching the full retracement. Now, market structure break. I'm going to show you two market structure breaks. They did their job during the rally, but we've fallen down through market structure break levels 2. That's also bearish. In order to repair this, we would have to reclaim 324 and then hold it and then move on up to those levels mentioned in these notes, 35 to 55, somewhere around there, to start building a higher low and higher high sequence. Moving averages, not much to say, but they're all above us, so they're also resistance levels. They're bearish. We've got all the moving averages, 20, 50, 100, 200, all stacked above us. We're about to go to the chart. Be patient. We're about to go there right now. Just looking at some of the, is winter over? Maybe. Now, I've got a parallel channel on this chart. There's no point in me talking about this right now. I'll look at this in a minute when we look at the chart. Otherwise, you won't know what I'm talking about. And we've also got gaps now above us and below us on the chart. We've got a weekend gap above us where we might have to revisit later on when it's done being miserable. And then we've got gaps below us around the $3 level, which is also a big round, acting as a magnet or inflection point. Gaps are targets, not necessarily immediately. The volume profile, we fall into the volume profile gap. We're below the value node or the point of control, if you will, and that's also no good. Now, the weather. Now, this is really important. At 314, the technicals are fragile. That's the price, 3.14, are fragile enough that forecast deltas matter more than levels. Okay, so when we're at extreme levels, like we are on natural gas at 314, having dropped from 5.30 or 40 all the way down $2 something down, incredibly overextended and very tentative at these levels, the weather forecasts matter a lot more than maybe they would normally. So colder HDD revisions can trigger violent short covering, which I mentioned before at the top of these notes. When talking about the overall markets, I said, maybe, or we could get a short squeeze. So yeah, if we do get a sudden change in weather, be very careful, because there's any excuse for this market to move up dramatically may be grabbed with violent hands and trigger this violent short covering. And warmer revisions keep pressure on and make 2.88 and 2.63 way below us much more reachable. So treat every forecast like an earnings report. Right. Now, First, I'm not going to go I will look at these levels on the map when we get there on the chart. I want to talk about the COT report, and I'm going to show you the COT report, but I'm going to give you this sort of summary. Managed money is net short 101K contracts, and they're adding shorts faster than they're adding longs. And there's very little being taken off the long side or the short side. And this is trend following behavior, not capitulation. So you'd expect some short covering. If this was a durable low, you'd expect some short covering or long trades, long positions rising faster than short positions on the COT report. We don't have any of that. The non-commercials, we're talking about the commercials there. Non-commercials, net short 165 and growing. So rallies are being sold and not chased, dips are not being bought, rallies are being sold. Commercials are net long, but they're adding to both sides. And remember, commercials are often hedging the assumed direction, which might, in their mind or view, be short. And so this is inventory management. It's not buying with the intention of riding the rally up. It's hedging a short market that's moving lower. Happy to buy weakness, but not panicking, etc. Producers, same sort of thing, adding both longs and shorts and still largely neutral. Not aggressively hedging, and therefore we could see an imminent squeeze. All right, so no hedging going on by producers, potential squeeze. What this means at 3.14 is that, this is just in summary, specs are still pressing shorts, no evidence of forced covering just yet. Commercials are patient buyers, not desperate ones, so no desperation. And seasonally, the Feb contracts often soften into late January unless weather intervenes. So the path of least resistance is choppiness, probing lower, and then reassess. Here's the COT report. I'm not going to show it to you right here. I'm going to show it to you on the page over here at the actual COT report from barchart.com. I want to show you a few things here. I'm moving off the notes here before we go to the charts. First of all, you can join us on X, ArcisFX on X. Go and follow us there if you want to get the intraday, intra-week updates. I update there regularly. So does Crypto Paul. And in between videos, you might want to know what we're thinking. You can catch us here on X. Just click the follow button or whatever it says. Just that's a by the by. And I often talk about natural gas. There's some crypto notes here from Paul. And there's my last natural gas post saying that I may buy on with a stink bid if we drop into that zone. We have dropped into the zone around 318 to 314, 310 maybe, but I have not yet bought. Now, let's have a look at this page. And this is the natural gas COT report. And I'm just going to show you that you can get this on barchart.com. And it's showing exactly what I just described to you, where, right, first of all, we're slightly below the average price for this time of the year. But you can see if we zoom in, the commitment of traders, the commercials are net long, 110. We talked about this. Producers adding on both sides, managed money, net short, managed money, net short, non-commercials, net short, swap dealers, net long because they're hedging and so on. So nothing there to indicate that we may get a bounce at any time soon. Now, we must look at the weather. And as Nat Gas Weather has said, this is the image of the day. And this is the forecast. Now, I'm not a weather expert or an avid follower of weather. We've got some very good people in our private group who follow weather very closely, but it's not something I do myself a lot. Obviously, I keep an eye on it. I don't study the minutiae of it, though. But here's the image of the day in terms of, let's try and zoom in here. I don't know if you can see it. And basically, it shows demand being very light around about going into this weekend. A little bit up over the last couple of days, light demand on the third, going to next week, and then slightly colder maybe in 2 or 3 weeks' time, 2 weeks' time maybe. And then looking at the demand over here, natural gas demand very, very low. So COT reports low, the chart looks terrible, the weather doesn't look very supportive of natural gas rallying, and so we must assume, until further notice, that we're going to be probing lower rather than higher until we find a bottom. We must find the bottom too. This is the Market Bulls report, and I pulled this up because I was going to look at gold, silver, and a couple of other things. This is data extracted from the COT report. But I'm not going to do that. But I do want to just quickly show you on natural gas that we're maxed out at 100%. And so, it just indicates an incredibly overstretched market with positions overstretched on the COT report, the position of traders overstretched, but not relenting, not giving up. And then I just want to do one more thing. I mentioned the FedWatch tool, just to get off natural gas for 1 second. The FedWatch tool indicates that I just want to check that the date's correct. What date is it? 17 days. I can't remember. I don't know which date it is. 17 days from now. So we're on the 11th. So 28th of January is when the next meeting is. And there's a 95% chance of no cut. All right. So when you're at 95%, that means there will be no cut. And I thought I'd have a quick look over here at the betting markets and have a look at Polymarket to see if they might have a different perspective. And they also think there's like a 95% chance. In fact, it might even be worse than the other one, 95.7, even slightly worse on Polymarket. So it doesn't look like we're getting a rate cut in January. All right, all of that's been said. The big takeaway from all of that was really natural gas and what I've been saying about everything looking negative. But when everything's, there are a few sort of metaphors for this. I can't remember what it is, but like when everything's looking absolutely terrible and bleak, it's something like, when the tunnel's the darkest, you'll see the light at the end of the tunnel, or when everything's terrible, that's when things might turn around. It's that sort of thing. When everything looks so bad for natural gas, don't be surprised if we get the short squeeze that's mentioned in these notes. Now, having said all of that, I want to go to the charts. We're going to start with the natural gas chart, and I'm assuming that everyone can hear me well and see me well, and that everything's working pretty well. So in order to do that, I've got to switch to my charts. Stop screen, give me 1 second. All right, let's go to the charts. Just checking that's working, and it is. All right, now let's go straight to the natural gas chart. And here it is here. I even put my notes up on there and saying what's going on with COT, what's the COT report say? COT report's pretty negative. Chart's incredibly negative. We've sold off. This is the day chart here on the Henry Hub natural gas futures price. You can see we have a weekend gap above us, that big black candle. We've got a roll gap, this big black candle in the center. And we've also got a weekend gap that we filled on the retrace just a few on Wednesday, Thursday and Friday, or Thursday really, Wednesday and Thursday, we retraced into the weekend gap that we had created on the previous weekend. So that's been filled. We don't have to worry about that too much now. In fact, let's get rid of it. The gap's been filled. So let's have a look. Now, I'm going to sort of zoom out here and give you a bigger picture. And you can see there's a lot of space below us. So don't start thinking automatically that this has to go up. Natural gas at $3.14 is not cheap. It's about roughly the right sort of price. Natural gas ranges between $2 on our average and $4 and $3 right in the center. $3.75 is a key level. $3, it's a round level. It's the sort of center level. It's a fair value. At $3.14, we're not cheap. At $2.50, we're starting to get cheap. At $2, we're starting to get even cheaper. Below, $2 and below, we're sort of super cheap, bargain basement level. Right now, we're sort of on the top shelf pricing level, not Harrods or Hermes or something like that, but pretty expensive, decent price. I've drawn in a parallel channel. You can see two yellow channels on your page. This top one here is the channel that resulted from a move earlier in 2023. We were trading this channel, if you remember, if you were part of these videos and the private group. We fell out of that channel and we tried to reclaim it several times, a couple of times last year. We tried to get back into that, up to that channel level. It's interesting how long it lasted, and what seemingly insignificant channel from ages ago became relevant again in the future when we reached up into it, rejected 3 times from the underneath of the channel. I then took the same channel and I duplicated it and put it underneath where we're currently trading. And super interestingly, even though I made the channel a little skinnier because of this last price movement down to the bottom there, but super interestingly, the channel top line, the new one that I've just recreated, is identical to the trend line that we've been running up so far. We broke down through the trend line into the channel, and then broke out of the channel up to the original channel and fell back to the top of the channel. Look what happened when we got to the top. We tried to bounce out, and then we fell back into the channel, and we're at the channel bottom now. Now, not many people, if anyone, will have this channel on their charts. It's simply an old channel from 2 years ago, which just has come back into focus as being weirdly and somehow relevant today. We're right touching the bottom of that channel. It's also a trend line which meets those three lows, and it also matches the trend line, the top of the channel, which matches the lows at the top there. So it could be that this level, in a weird sort of way, might be a place that we bounce out of. I wouldn't put any money on that, though. Not right now, anyway. I wouldn't bet on it at the moment. This is the day chart. I'm going to zoom in shortly. Now, if we break down through this level, and remember, we're now down below the 786 fib. That's this one here, over here, that we spoke about in the notes. We're down below the 786, which is not good. We're down below the market structure break level, that green line in the middle there, and another one over here, down below both of them. That's not good. The bottom of this breakout range where this new contract began is just below us, so we're heading down there now. There's also a blue trend line, which comes up from further back. It's not the best trend line. We've only got one sort of double touch there and one touch there, maybe not even another one after that. But it is a trend line, and it meets up with that order block down here at about $2.87. If you remember, 287, 285 to 287 has been a key level on multiple occasions over the last number of years too. So we've got this 314 level at the bottom of this channel where I had my blob, and the blob is the area that I was aiming for, as you know, where I wanted to put my stink bid whilst I was traveling. We didn't get there whilst I was traveling, so I removed the stink bid. But we're in the same place. I might be in the right place to buy this market. Let's have a look at the 4-hour chart. And once again, I'm not suggesting that it's a good idea to be buying here. This is the 4-hour chart. We've got three shaven bottom and head candles moving down. We tried to buy here. If you remember, we had longs from there, and I hedged those actually when we started moving down to that level. Let me just zoom in. So let me show you my plays. I bought here. I hedged it immediately when we broke down through that support, and therefore locked in a very small loss. When we started moving up after that big white candle in the center, I unhedged and started hoping that this would move up. It did not. It fell back down to my original hedge level. I didn't re-hedge until we got down below that previous hedge level, and I re-hedged. So I'm long from those two positions there at about, I don't know, 340, I can't remember the exact number, don't want to be incorrect, 340s, and I'm hedged in the 330s. So that's kind of where it is right now. So I've locked in a loss on my natural gas long trade, and it's now moving short. I've got a short position on as well, which is now in profit. My long position is moving into a loss as fast as my short position is moving into profit. A full hedge, a 100% hedge. Now, I want to get rid of this hedge, obviously. At some point, I think this market will move up. I don't know where. It could be in this blob that I've been talking about all this time, at the channel bottom. We haven't quite got there, actually. It's still a little bit to go. Check there. There's the channel bottom at 308 or 9. We're currently at 314. So we might have to get another 5 cents down, or maybe just through the channel bottom with a spike through and back up again. But wait for that to happen. Don't take these trades without waiting for that to happen. Now, I want to talk about this problem here that we had on the move down with some folks that I've been trading with who got messed up during this move down. And I think the problem is that because we got long here, hoping for a bounce out of that support level, perfectly good play, perfectly decent analysis, because we got reversal candles. We got a one down, one up with a bullish, not quite engulfing, but almost. And we got long, no problem with that. Then we got hedged. Then I got unhedged because we bounced out, and then I had to get hedged again. With the long trade, the hedging, the unhedging, and the re-hedging, it becomes, I don't think it was frantic, but it was certainly busy. And I think a lot of traders eventually got tired of the, didn't want to do the second hedge, basically, because it was locking in another 2 cents extra loss. And it become, if you're trading with leverage, 2 cents is quite a lot. I don't trade with leverage, so it's not the same effect for me. But, if you're trading at 10 to 1 or 5 to 1 or even 2 to 1 leverage, 5 cents is quite a big move. If you're trading at 3 to 1 leverage, it's equivalent to a 15-cent move. It's a big move. So, yeah, what's going to happen next? I don't know. If you look at all the stuff I was talking about earlier with the positioning of traders, all very negative, all very bearish. You look at the weather, all very bearish. If you look at this chart in front of you, incredibly bearish. The sentiment's bearish. Everyone's been beaten up. A lot of people have got no more money to take these plays. It's not just you. It's not just the retail traders, but corporate traders get beaten up too. Some of them reach their risk limits, can't get back in, have to wait for another month. Corporate seagulls start flapping around and all that sort of thing. Just going to get my screen back up again. I seem to have lost it. Give me a second. All right. So, yeah, I don't know. But here we go. This is the thing. If you've been trading this very badly, and I know some people have, please go back and reflect on what you did. Look at what I did. I kept it really simple. I bought, I hedged immediately that we broke. So I bought there. The moment we broke down through that swing low, I hedged. Then I got long. I unhedged and tried to ride this higher. It collapsed back down, and I got re-hedged the moment we got down below the previous hedge level, and I'm still hedged. It's a pretty simple play, and this is not rocket science. It doesn't require nerves of steel. It doesn't require a degree in applied mechanics. Nothing like that. It's just consistency, risk management, and being careful with your trades, knowing that natural gas can do anything. If you love trading natural gas and you don't know how to do it and you constantly lose your trades on natural gas, please take my natural gas course. It's available on the links below. It's not expensive. I've kept the price pretty low on purpose, and it'll teach you how to trade natural gas. And you might spend, look, it's only a few $100s, and you might spend a few $100s and save yourself a few thousand or a few tens of thousands of dollars. One person that I know last year, and this is not exaggeration, it's a fact, I actually verified it this weekend, lost 150,000 pounds last year trading natural gas because of poor risk management. Not poor technical analysis, not poor understanding of the market, not poor understanding of positioning of traders or trend lines or moving averages or how charts work or how the natural gas industry works or how to place a trade or how to use leverage. None of that. Simply by taking too much risk, too much leverage, and refusing to get out of a bad trade. Look for one decent trade per contract. So every month we have a new and a fresh contract on natural gas, and every contract trades in a different price range and has different behavior. Wait for that contract. Every month there's a new contract. Wait for that month's contract to give you the best setup. Don't trade the iffy setups. Wait for a week. Don't get into the trade for a week if it doesn't look good. Trade the next week. Grab your 20 cents, 30 cents, 50 cents, $1 move on natural gas, and then get out and wait for the next contract. Sometimes those trades, the good setups only come around in the last week of the month or the penultimate week of the month. You don't have to trade natural gas every day, particularly if you're swing trading. If you're a day trader, you're obviously going to be trading every day because you're day trading. But if you're a swing trader, look for those, for that one good trade opportunity on the contract. Now, on this contract, that one good opportunity was short. But my opinion and my feeling is that natural gas buying is not done. I think there's an incredible demand for electricity that's only just beginning. And I think it's not going to be supplied by green energy and net zero and all of that sort of thing. Although it's an admirable pursuit, it's not going to happen. And I think natural gas is going to be very, very key. I don't think we've got, I think we've probably only got like 20% of the energy needs for the future currently being met. I think we're going to use 5 times, 10 times more electricity going forward into our new economy, industrial revolution type revolution, AI economy. Energy is going to be absolutely crucial. I think natural gas plays a very important role in that, and there's no way around that. So this is not done yet, but we've got to wait for the selling to finish. And when we see the selling finishing, when we see bouncing along the bottom, it's going to take some time to form structure. We're going to see the COT report starting to change structure too, and we'll start to see some buyers come back into the market. And I think we can get all the way back up to the weekend gap at about $5 some, and maybe the new range is $3 to $5. Now we've got 15 cents to go before we get to $3 down below us. I'm going to see if we can get down to $3 or maybe just below before buying, unless there's a very good reason to do otherwise, and we see a dramatic reversal in fortunes. And as I said, it is possible that we could see that at this particular level right here. And I'm going to go back to the day chart just to remind you of this very long-term channel, which most people won't have drawn because it's a weird channel that I have from, it's a memory, all right? It's a market memory, which is not always obvious. Sometimes memories are vague and they're weird and they're sort of hazy. This is one of those market memories, and you can see the market remembered it when we got back to that level, and we also remembered it when we traded along this trend line. We've set the same gradient just a level lower, and we're now at the bottom of that channel. We've got the potential for a short squeeze, but no evidence that that's going to happen. So don't preempt it. Wait for it to actually happen. Wait for this to start turn around. Let's go back to the 4-hour chart, and there it is there. I want to show you one thing quickly on the spot market, not spot, on the continuous price ETF here at Pepperstone, where I occasionally trade mostly in the rollover week, so I don't have to get caught up in the futures rollover. And I want to show you how this looks in terms of Fibonacci's. And I've drawn a fib right from the bottom right to the top over there. And you can see we've come back down through the 618, through that big support line in the center at 350, and slightly below there into the next point of control. But we have not yet reached the 786 here, the 78.6% fib on the continuous price. Now that's at $3.23. All right. And we're currently trading, let's see how far below us that is. We're currently trading at 338. So that's 15 cents down below us in order for us to get to the 78.6% fib. Interesting, isn't that? Because if you look at the futures chart, 15 cents below us on the futures takes us down to $3 through the bottom of that channel. Unfortunately, let's go to the day chart, but through the bottom of that channel takes us down to $3. We're at 314 now, into that order block, the blue rising trend line down here, and the launch point of this last contract that's now failed. So basically a full 100% retracement takes us back down to $3, 15 cents down. And as I said, we see on the continuous price, 15 cent down takes us to the 786. And that's all on natural gas, folks. I've spent half an hour on natural gas today, very unusually so, and I'm now exhausted. I want to cover a couple of other things, not too much detail. I'll then cycle back to some of your questions. I'm going to quickly run through what's going on here on currencies. Dollar ticked up quite strongly on Friday, actually the whole week last week. As I said, we had a one up, one down reversal candle pattern at one point. It didn't work underneath the 200 period moving average and so on. We're now above the 200, above the 50, above all the moving averages, and looking quite well supported. And above that, not quite, actually just up to the top of that last swing high to the left-hand side. So dollar getting a bit of a bid. It might just be the top around here. I don't know. Let's see what happens. I still think there's room for the dollar to move down lower. I've taken my position off the Aussie. I took profit on that one. Still got a short dollar yen position. Nothing else on currencies. I don't know what the dollar is going to do next, but I think overall, I think we can get down to the low 90s in time. Now, NASDAQ, as I said in the notes, NASDAQ has not yet made a new all-time high, but we're long across the board on all the stock markets now. There are my positions on NASDAQ, 1, 2, 3 positions, all in profit. And we have a rising ascending triangle here on the NASDAQ. We have not made a new all-time high. We've got to this top. It could be the 786 fib, actually. I'm going to draw a fib quickly from the top to the bottom. Let's have a quick look. It's the 78.6% Fibonacci as well. Let's just actually, excuse me. I'm going to just have a sip of Red Bull. There's the 786. Excuse me, last chance Fibonacci. We've tested it once before. There again, it's an ascending triangle with a rising trend line underneath. and there's our long positions. I think if we break out through the top here, it's a very simple calculation. I'll simply take the height of the triangle. Let's take it from there. The height of the triangle side, it's upside down, but that's okay. And I'm going to put it to the breakout point of the triangle if and when we break out. Let's say it's today or tomorrow, next couple of days. And that gives us a target for the NASDAQ, simple technical target. And that's all the way up at about 28,000, okay? Actually, exactly 28,000. So that's the target for the NASDAQ if we break out through the top, purely a technical target based on the triangle shape and size. S&P has reached a new all-time high. I'm still long. I still think that we've got loads to go up on these markets. I know a lot of people are calling for recession. A lot of people are calling for a stock market crash. I saw some people, and by the way, it's not JP Morgan and Morgan Stanley and the big banks or hedge funds, but others calling for a 50 to 70% correction in the S&P and the NASDAQ in the next year or two. I don't think it's going to happen in at least the first quarter or half of next year. And I think we're going to move higher. So therefore, I'm still long. This one's actually broken out of its ascending triangle. If I draw a line along the top there, and once again, we can set a projection, draw a line along the top there. It's not as neat or good as the NASDAQ in terms of ascending triangles, but we have broken out and we have made a new all-time high. This triangle is at the top, whereas the NASDAQ's triangle is not quite at the top. It's sort of under the 786. So as you can see, not through the 786, but if we get it going up through there, should be a good and big rally. I'm also long on Circle, MSTR. I always leave the MSTR page off. MSTR, a lot of people ask about. I think we're trying to form a base. A lot depends on Bitcoin. And if we look at the Bitcoin chart, it's doing okay. Held 90,000 at least this weekend, which is something. I was hoping it would hold, and it did. We haven't collapsed down. We've still got Sunday night shenanigans to come along. In a couple of hours' time, there could be some weird stuff that people try to mess these markets up on Fridays, on Sundays. But MSTR holding okay. It still doesn't look great. It sold off big time on Friday after an attempt on Thursday, and we did actually close above the 20-period moving average on Thursday, which is good news for the first time since the October sell-off, I think it was, on Bitcoin. We have not yet closed above the 20-period until Thursday last week. We then came crashing back down again, but it's a start. And I've got two long positions on from over there and some from much higher as well. So I'm quite out of the money on MSTR, and I will hedge the entire lot if we break down through 150, essentially 149. I'm hoping that we won't, and I'm hoping that Bitcoin gets a bit of bid early next week, and MSTR gets a bid as well. Talking about Bitcoin, Paul will be talking about this early next week, and we'll talk about it on Wednesday in the live members session too, and Paul's live session and crypto videos next week. But just to say, from my point of view, I trade mostly Bitcoin. I have some of the others, Ethereum, XRP, Solana, and I've got a whole bunch of smaller altcoins. I don't regard that as my serious play. That's speculative play. My holdings are in Bitcoin. And Bitcoin on the CME chart here did okay on Friday, closing at 90 and a half. Yeah, closed at 90 and a half on Friday. That's going to open later on today. And then if we look at what's going on actually in after hours or open outcry, this is live now on Coinbase, and it's holding up quite well. We're still trading at 98, so we closed at 90 and a half. So we don't want this to move away from 90 and a half because we don't want CME gaps. So assuming that we're holding 90.5, it's looking okay. We've got to get through a lot of stuff up above us still, and so far we could be still in a bear flag, drooping down towards the bottom now. Still held up by the 50 and the 100-period moving average, 20 rather, and we've got the 100 and the 200 above us. Overall, I think this is okay. The danger is, of course, if we break down through this previous low and start moving down, I think we're going to go a lot lower on Bitcoin. So we've talked about this a lot. I don't want to talk about it too much, but actually I can go to the weekly chart, just show you one interesting thing here on the CME futures, back to the weekly chart. And what I do like about this chart is that we have a green week for the first time since October. And when we get a green week, that was last week, we normally get at least one more green week thereafter, or at least sideways. So this coming week should be green. And notice how on this chart, this is a Heiken Ashi chart, it's not a normal candle chart, how we've made higher highs and higher lows. And currently, we're holding the 100-period moving average in what looks like a very similar pattern to what happened over here in 2022. Over there, let's move it along. Similar pattern to this, and a similar pattern to this back in 2022. And there it is again, followed by last week's green candle. Look how these green candles start off really small and then start to accelerate. We saw it over there, over there, over there, over there. And perhaps we'll see that now. There's another good example, one red candle in between. But generally higher highs and higher lows, and holding the 100-period moving average here on the weekly chart. And yeah, I think that's looking okay. And if we can hold that 90.5 level into next week, not get closed down below through that level, we should be okay. So that's Bitcoin. And I'm also long on Ethereum, XRP, and Solana. And I'll talk more about this in the private group. And of course, Crypto Paul will be talking about that too. Now, metals. I need to talk about metals very urgently because people are asking me about metals. I'm short on gold. Yes, I am. Someone put up on my YouTube channel, my members, my followers on here on YouTube must all be absolutely broke by now because I've been shorting gold, and put a very nasty comment up on my YouTube channel. Of course, I just blocked that person because there's no need to put up snarky remarks. I try my best. Don't ever get everything right. I don't claim to get everything right. But we have not been losing money on gold, even though it may seem like that. Because at the same time, I've been buying silver all the time. So we've been shorting gold, hedging it, shorting it, hedging it. We've still only got 2 short positions. We're above them now, of course. We've moved above the 786. So as I said, we've got to talk about it. Because if we don't move back down below that 786 today, there's a danger we'll get all the way back up to that last high where we, the most recent high over here, and we're through the 786 now. So if we break above that high and close above that high, I will then hedge my gold position, but I've also got long silver positions on simultaneously. And I've added more long silvers on Friday. We bought more silver, and I've been long on silver all the way since about, I think $27 down here, 27, 28. And I've been buying consistently ever since then. Now, how far could silver go? I think silver could get a lot higher, but I'm not betting on it. And in a sort of a way, I am betting on it, but in a sort of a way, I've got the gold short as a hedge against this very overbought, exponentially blown out market that may well go much, much higher. If it does go higher, and I'm hoping it will because it's moved faster than gold, we've made more profit on silver than we've lost. We haven't lost any money on gold so far, but any floating losses on gold have been much, much smaller than the gains on silver because the gold-silver ratio has dropped off so dramatically, with silver gaining footing against gold day after day, week after week, month after month. Silver is going gangbusters versus gold. And so we've been buying silver and selling gold as a hedge in the correct direction for this market that's favoring silver over gold. Silver could get much higher. I've got 2 more fib extensions drawn above us, and there are more. We could go even higher if you want to, and I haven't got those drawn in just yet. But we've got one at 92 and one at 102. And because of the exponential nature of the way this is moving already, we could easily just zoot up into that level, into any of those levels before moving down. Let's see what that would look like. So something like that, exponential, and then a collapse thereafter, something like that. So that's the kind of thing I think we could get on silver. I'm not banking on it. I'm not, expecting. I never really expect anything from the markets. I have certain hopes and plans, but if it doesn't go my way, it doesn't. That's just trading for you. So I'm hoping that this will go, even more exponential and move up into those levels, but it may not do so. If it doesn't, that's fine. We'll take profit on all the longs that we've been taking profit consistently as we've been going anyway, but we've got some fresh longs that we'll take profit on. But if it suddenly flops down and doesn't move up any further, and that's the end of it, we've now also got their short gold positions to start trading, and maybe we can trade them all down. I'm also short on copper. And I said at the beginning of this video that we need to watch this very closely because copper is incredibly overbought. We're at the top of a very, very long-term channel, the green channel. It's worked beautifully, this channel. It's not neat. We've had spikes above and below it, but you can see it's very, very consistent. Even going back into 2021, where the top of the channel was actually a support line. And so we're right back up there. Could we blow through the top like we have done with silver and move on dramatically higher? Of course we could. And maybe that channel top will not hold us down. But it's a rising channel, and it's fairly flat, even though it's rising. We've moved up into a new all-time high. We've tagged the top of the channel. We're incredibly overbought. Copper's expensive at this price. But there's going to be a lot of demand, not only in building and construction, AI, electricity, electronics, batteries, and you name it, anything to do with electronics, electricity, but also in war, copper. It's used a lot in war too, as well as things like uranium and even lithium. So maybe there's and this defense budget for the Pentagon is for 2027, next year, and it may not be approved. I mean, it probably won't be, but at least the thought's there for now. And copper might be one of those things that gets a bid. I'm short on copper. I don't know. I want to see. Maybe this channel top will reject for now, and we'll get a move back down to the center line, something like that. I don't know. But these metal plays are tricky because they're all so overextended. I don't want to be short, really. That's why I'm holding my long silver positions. With a smaller position on short gold, but I'm betting on the long side on silver, and I'm thinking that copper could go the same way as silver. If this starts moving higher than this previous high, let's go back to the copper. We will talk about platinum. If we move higher than that level there, I will hedge my copper trade, but I'm hoping that will hold it down. This is not a big position. It's not as big as my gold and silver position. Now, platinum. Someone wants to know about platinum. I don't like trading this. It's a difficult instrument to trade. It's thinly traded. It moves violently. We've broken out into incredibly high range. We've sort of doubled, almost, well, 2.5x'd the price since these lows just a year ago, really. And we moved up into a very, very high level. Let's look at this on the weekly chart. I don't know how far this chart goes back, quite a long way. Not that long, actually, only to 2005. Let's see if we can get back to, let's see if we can get a longer term chart. Platinum. Maybe platinum futures. We could look at platinum futures. I don't know how that looks. Oh, there we go. Okay, platinum futures. There we go. So we are at new all-time highs on platinum. We've broken out through that level there at 2,298.56. Call it 2,300, right? That's the breakout level. Let's put a line across there. I don't trade this, so and I don't observe it nearly enough to be the best commentator on it at all. I like to get familiar with an instrument when I'm trading it, and I like to know its personality. I don't like the personality of platinum for a start. That's why I don't trade it. But look where we are on the futures, the breakout level. Have we returned to that? Yeah, we returned to the breakout level, the black line, dipped through it. We're back at it now. I think it's kind of difficult right now, really. Are we going to get through there, or is that the top for now? I wouldn't be buying this at this level. And this looks like a topping sort of process as well. And if it is going to go higher, I don't think it'll go a lot higher. And I think the risk is now to the downside. So if you're going to be buying, try and buy as close to the 20-period moving average as possible if you're going to be buying in the short term. But maybe wait for dips down to a trend line or something like that, or a Fibonacci level. I'll draw a trend line on for you. And you could look at once again, don't take my advice on this. I don't know what I'm talking about when it comes to something that I don't observe every single day. I don't observe platinum every day at all. And therefore, I don't know its personality. There's a trend line that you could get down to, 50-period, 100-period moving averages. And I dare say if we drew a fib from that last launch point, we'd have a decent fib target quite a long way down because it's very overbought. But the first fib is actually the best one because we've already tested it and bounced off it. There's the 38. Look how we bounced off the 38 perfectly. Back up to the highs. Now, there's another one. I would rather get down to the 50% fib. 50% is always better than 38 if you're unsure. Markets will often retrace halfway and go through the 38%. and get a little bit further down. And sometimes they'll go to 618 or 786, but 50 cents probably the safest bet. And notice here that the 50% level on platinum is also where the trend line is that I've just drawn in. And so we could see something like that. But I think eventually you're going to have to accept that this is going to have to mean revert down to the 200 period or something like that, and that we could end up seeing something more like this, and maybe eventually, I don't know, who knows? This is all just hot air right now. But I would say down to that level at about 1750, 1750, 1800 is probably better. I like the 8s and the 2s, so 1800 for a bounce off the 50, 100 trend line and the 50% Fibonacci level. We may get a double bottom on a bounce off that 38.2% fib if we got back down there and bounced off there, double bottom maybe. And we might even get through the trend line all the way down to some of these lower levels and the 200 period. I wouldn't be buying at this level. I'd certainly be waiting for a retrace. But if you must buy, wait for it to get down maybe to the 20 period moving average. And that's currently at 2,100 or probably at the earliest, in my opinion, down to about 1,940, something like that. We're currently trading at 2,296. So that's platinum. I'm not particularly interested. WTI oil, I'm going to quickly work back to the energies page. Of course, these aren't moving because it's the weekend. I'm going to try and get some more shorts on WTI, spiked up to the trend line. Yeah, I think, the Venezuela story might be decent for oil shorts. And I just think that overall, oil is going to get cheaper. I think we're going to have to test that $50 level, probably 48, maybe even slightly lower than that before bouncing higher. I've been selling oil for about 3 years now, and I'm continuing to do so until we get into, I think we can get to $50, 48, and then I'll start to look to buy it. We've only bought oil once, and that was at this double tweezer bottom some time ago, early last year, actually, April. I think that was the only time we bought the entire year last. And then since then, we've been selling every pop. I haven't even got all my short positions drawn on here anymore. But every time there's a spike up into this chart, you will have seen in previous videos my short arrows, my short red arrows where we've been selling. All of these pops, every single one of them I've sold. And we're still selling. And we've now just popped up into the trend line, the 100-period moving average. I thought we could get higher with this green path, but we didn't. And we moved lower. I've got another path down below us on the red path. And that's where I'm aiming for, down below $50, down to about 48. And then I think we could see a nice sharp short squeeze out of there. So that's oil. And then I'm also long on uranium, bit of a pullback on Friday. That's okay. Nice breakout, pullback, classic. We're long from those two green arrows in the center of your page. And this is a classic breakout pullback, which I often speak about. So there's the breakout. Sorry, it's in red. Then we pulled back. We haven't quite got there, so allow for a pullback, maybe even to the bottom of the channel, something like that, and then a resumption of the rally. This one, let's make it green just to be nice to it. This one, uranium, URA, the URA uranium ETF over at Global X, could go much, much higher. And I often show this weekly chart just to show you how far we could go on URA. And we've been as high as 134. We're currently trading at 50. So we could 3x from here. In fact, we could go 4x, 5x, 6x if uranium keeps on getting a bid. All of this messy stuff here at the end of this U-shaped bottom indicates it's time to get going, and we are doing that. We got long, first of all, at about $19.70. We're currently trading at 50. So great trade, but let's hope it just carries on. Now, let's have a look at TLT. We're long on TLT, 2 positions on there. Treasury is finally getting a bit of a bid, still stuck below the 20. And, well, we've gone through the 20, the green one, still stuck below the 200, 100, and 50-period moving averages. I thought we bought there originally where the first green arrow is. And I thought we could get a bounce out of there, fill that gap. Still haven't filled that gap, big, massive gap there where the moving averages are. So I think TLT might be okay. Bitcoin gold ticking down a bit, not good for Bitcoin, but gold did get a bit of a bid. And then Bitcoin dominance just moving a little sideways. And then when it comes to softs and grains, folks, I missed this trade completely on Friday. It's a pity. It's a great pity because I've been waiting for this. This is cocoa shorts, sold off dramatically. I thought we could get a bit higher first. We didn't, but we had a dramatic sell-off. I didn't manage to get it. It was too quick. If we look at this on a short-term chart, the 1-hour chart, this is cocoa. It just got going, didn't look back, no retrace, no chance to get in. And so I want to get short on cocoa now on a bounce back up to the underside of that breakdown level, if we get it. I don't think we're going to, though. That's the unfortunate point. So somewhere up into this block over there where the black line is at about 5.8, something like 5,800, if we can get it. I don't think we're going to, though. So we're going to look at this very closely at the open tomorrow, see where we can get short on cocoa. And I'm looking for a move down, a continuation of this move within this big channel, something like that. If we don't get the pop, which looks like we may not do now, then a move down to the channel center line that would take us initially down to about 4.9 and then down into the actual, where it actually belongs ultimately, right down at the bottom here in the 2s and 3s. So that's cocoa. I would like to get short. Coffee did a very similar thing. The 2 beans just selling off. And once again, I thought we could get up there and resell coffee, but it sold off very sharply. I actually missed this one. I missed a trick here because we had a tweezer double top spike high into the channel center line Wednesday and Thursday. Friday sold off. It was heralded and forewarned and given to us on a plate, but I missed it completely. I was too focused on other things. So similar to cocoa, I'm going to try and short this on a bounce. Let's have a look at where that bounce could be. And I think really, I don't know, anywhere up into that sort of red line, maybe something up into that level there. And that would be at about 350 to 360, something like that, 350 to 360 to short coffee. So yeah, and once again, this one also may not bounce out like cocoa might not do so. We might miss out. Also got fresh longs on soya, corn, soya, cotton, and wheat last week. So we've got fresh positions on those. You can see the positions I've got on there. That one, we got added a new position on cotton at the top there. It's fallen back a bit, but good move on wheat and a little bit, a bit of a bump up on soya. So that's looking okay too. Folks, that's it. I spent most of the time talking about natural gas, but I thought it was important to get through some of that. Yes, I'm long the DAX. I am long the DAX, yes. Let's go back to that. I'm going to try and get to your questions very shortly. I'm not sure if I mentioned this, but yes, I got long on the DAX. I was hoping for a pullback. This is a great trade, by the way. This is a flat top breakout, and I'm simply aiming for the width of this channel that we broke out from as a target. And so that's roughly, call it 23,000 up to 24.5. So 1,500 from 20. So up to 26,000 is my target. And that's actually where the top 200 period Bollinger Band here is on the stay chart on the German 40 as well. And so I'd expect us to move up to there, something like that. Beyond that, I don't know, but that's my first target, something like that, along the German 30 or 40, depending on whether you call it 30 or 40. All right, now there's a lot of questions here, folks, and a huge number. And I wish I could, I'm going to try and read through in 3 or 4 minutes, try and get through some of these questions. And I may not even be able to greet everyone, but I'll try my best. Jobs numbers are worse than expected. Yes, okay. Good morning from cold Cali, Jazz. Wow. Good. I don't know what you mean by good, but that sounds good. Okay, cool. Okay, okay. I know where we are now. All right. European storage is bullish. Yeah. So Europe's going to need a bit of because going to need some LNG from the US, but I think that's priced in already. And I think the amount that they need is not going to affect natural gas all that much. But who knows? Who knows? Hi James. You always look at the COT report weekly and short on the high. This time you were long from top till bottom. I have not been long from top till bottom. No, not at all. I've been long and hedged, but I'm still remaining hedged. Is winter over? I don't know. I've not been long from the top and adding at all. No, that's not the case. If you're not in my private group, or if you are in my private group, you'll know how we play these. But I've not been buying willy-nilly natural gas as it's been dropping from $5 to $3. Certainly not. I don't trade like that. Thanks, James. Based on recent price action, do you anticipate a price reset for another leg up to keep pushing? Yeah, so I don't know. I mean, basically at the moment, it looks like we're going to move down. Unless otherwise proven on natural gas, I'm going to assume they're moving down to $3 and possibly lower. But as I said, we could get a sharp short squeeze out of here. And as I say that, Zen Veg says we are maybe getting some more bullish weather. on natural gas as I'm talking, and we will get the reports updated in a few hours' time. We'll be looking at that in the private group too. It's the 11th today. Are we taking a new entry? Would I recommend taking positions in current expiry? No, I don't recommend taking any positions, Omkar, at the moment. But I think what you're saying is, are we going to be trading the front month or the next month? I only trade the front month. So I'm not able at my brokers to trade forward months. So I only ever trade the front month or the continuous price at Pepperstone during the rollover week, or in the rollover period. The bright idea of trading further out months, yeah, it's a good idea if you can. Sure. It's not something that I do, and it's difficult to comment on. Thank you, Ray. Looking sharp. Thank you so much. Appreciate that. I've got my Charlie Sheen shirt on today, so vertical stripes. You don't often find them in the stores, so I found this one. I like it. Cold weather in northern and eastern states. Okay, so all right. So maybe the weather's changing. Cold snap from the 16th. Yeah, so it's only the 11th today, folks. So, but sometimes these weather patterns move up faster than expected. So, as I said, a sharp short squeeze is possible. I don't think it's likely, but it is possible, and we should always keep that in mind, particularly at this current level between $3.14 and $3. It's possible. Short side of the hedge at break even. Short side of the hedge at break even. Let's have a look. No, it is not. The short side of the hedge is in profit by 15 cents. The short side is in profit by 15 cents. And the long side is out of the money by 30 cents, something like that. So about a 15% difference. But we are in the money on the short, for sure. But, 15 cents. I wish it was a naked short, but it's not. Buy the dip. Okay, Will. All right, Will, go for it. Running 1.5 lakh loss. That's a lot. For those of you who don't know what a lakh, it's spelled slightly differently, Shiva, but if you don't know what a lakh is, go Google it. It's a accounting term in Hindi, which is a lot of money. Thousands. All weather apps show very cold weather in the coming days. Yeah, as I said, from the 16th. US expecting a lot of energy. Cold snap imminent, sure. RSI indicating a strong bounce coming. Yeah, RSI has been oversold for hours, multiple 4-hour candles, tens of them, and multiple days the RSI has been oversold. So don't trade on the basis of the RSI being oversold. It doesn't mean it's going to bounce. Sometimes an oversold RSI means it's going to continue. What's your hedge? I hedge with the natural gas. I trade the same instrument in the opposite direction, literally. Keep on saying weather's bearish, weather's turning cold. Yeah, thank you, Silver. So turning cold. A lot of manipulation. Of course, there's always manipulation. Canadian geese, Canadian geese down in Maryland. It's colder. Manipulation going on. Yeah, well, we'll see. Manipulation, I don't think so. To be honest, the COT report shows that this is not manipulation. This is actual ground swell, underswell of commercials, large players, hedge funds. Everyone and every man and his dog is short. Sometimes there is manipulation. Sea fog. Sometimes there's manipulation, but it's normally not everyone's trying to manipulate the price simultaneously. Retail is liquidated. Yeah, that's a very good point, Jacob. Retail needs a lot of people, not just retail, but once the liquidations begin, that's when we get the short squeeze. Good evening from Romania. Lovely to see you. I was watching a documentary about Romania just the other day. Shreed, and learning about, well, I knew about it already, about Vlad the Impaler. Actually, not a bad guy, actually, it turns out, Vlad the Impaler. But he's not the same as Dracula. That was a different person. In northeastern Transylvania, or Romania. Yeah, interesting. Thank you so much, Will. No crush until midterms. Yeah, and folks, there's loads more questions, but no problem talking about the DAX. Okay, thank you, everyone. Silver. Yeah, I talked about silver in quite some detail. platinum, silver. We spoke about silver, and yes, I'm long the DAX. Hang on, I'm just going through questions. Platinum was higher than gold. I think that's the price of platinum versus the price of gold isn't that important. Status with the DAX, long the DAX, as I said. Cocoa, we talked about. All right, I think we've covered everything, folks. Have a great evening. Thanks for being here. I really appreciate it. Sunday night, every Sunday, Sunday Night Live. It's the show of the week, I think. It's great. I love doing this show, and I'm looking forward to next Sunday already. But there are videos every day of this week, including those from Crypto Paul and myself talking about Bitcoin and altcoins. And we have a live stream on Wednesday. All you got to do is subscribe to the channel, press the notification bell to make sure you don't miss any videos from us. And you could go a step further, of course, and join the channel and get the channel members bonus videos and other content and other perks. And that's about $2 or $3 a month. I thought it was $1, but it's about 2 or 3. Still pretty cheap. So there you go. Folks, have a wonderful evening, wonderful Sunday. And for those in the private group, I will be there for the open at the Natural Gas Open, and any trades, any updates, any position changes, any exciting new positions, I'll update live in the private group. If you're not in the private group, come and join us. I'll tell you what trades I'm taking in a few hours' time. And I think that's everything. All right. And I think I can say goodbye now. Full reversion, right down to the bottom there, as I said, right back down to $3. God bless you too, Will Hayford, and everyone else. I'll see you next Sunday, and it's been great having you. Take care. Bye-bye.